You're saying energy remains the best asset class to own right now. It has had a decent run. I'm not saying that 2023 has been that rewarding, but you've seen as dividend plays these stocks perform. With energy markets coming back, do you think that this could be a secular story that could be defensive in nature through the cycle next year?
Yeah, so actually that's an excellent ways to phrase it. I'm not necessarily invested in the space thinking they're going to outperform greatly, that these stocks are going to magically start rising, 20, 30, 40%. It touches on what you just said, which is on a capital return profile, especially when you look at adjusted for inflation and look at the outlook for stickier inflation for the next even several years. The dynamics for that capital return and to be insulated with value is very important. And I still think that's one of the things that a lot of investors don't, truly understand or position for. That sometimes it's not, to capture that alpha and to make, a 30, 40, 50% return. Sometimes the best situation is to be defensive and to own, good value, hard assets, things that, if inflation continues to tick up, it'll tick up with it, like inflation here at $100 a barrel, getting very close to on Brent, something that I touched on, I think, earlier this year, that the first half would be tough for oil and gas and the second half could be very dynamic. So we're starting to see that at play. And again, this is the sector I think you need to be in for the next several years.